Traders, Cause of Any coming to you from theclosingprint.com, May the 3rd, 2020. In this edition of your weekend video newsletter, we'll review the indices, all of which moved marginally lower with the exception of small caps and the NYSE. Both of those closed green on the week, though the small caps did close below its absolute high of the week. International indices closed higher, and the Hang Seng noticeably closing vastly higher, only exceeded by the Bombay Stock Exchange, which closed higher by 7.63%. VIX started the day higher, and by the end of the day was at session lows. That would be something we want to see more of this week to start the session on Monday. And the put-call ratio also started higher on Friday, showing more puts were being bought, but did move lower by the end of the day, improving and dropping a bit. We have some mixed signals again this week, and notice that first quarter earnings generally are weaker, but the number of positive earnings reports are helping the technology sector. After utilities and healthcare, technology was the highest percentage of around 80% of the S&P 500 companies beating Q1 earnings expectations according to FactSet. Data as of April 24th found that 81% of tech companies also are beating revenue estimates, second only to the healthcare sector's 90%. In addition, tech companies are on track to have the largest gap between actual revenue and consensus estimates at 2.3%. That's very interesting considering many traders and investors are very negative at the present time. In addition, those numbers don't even include the earnings winners of the past week when software and internet bellwethers stood out. We have some solid earnings reports out of Facebook. Microsoft and ServiceNow beat views, while we had the big cap tech names finishing mixed on the week, with Tesla down 3.29% and Intel down to 3.02% near the 21-day moving average. Bond stock ratio is neutral. That did fade. We saw HYG and junk fade a little bit on Friday. Dow Composite faded as well on Thursday and Friday, and the S&P 1500 gave us a bullish cross, but it's flat as of Friday. XII is bullish. It's just below the 200-day moving average. Tick and TickQ market sentiment has been trending lower on Friday. That was showing institutions were selling more stocks on the downtick than they're selling on the uptick. We want that to reverse and continue making higher highs and higher lows this week. The rest of the oscillators and signals are mostly mixed on the week. US dollar finished at the lows of its recent range, and all of the Forex pairs are tightening in their ranges again this past week. AGG, IEF, SHI, SHY, TLT were all in sideways ranges, tightening up a bit there as well, showing safety trades and fear trades are dissipating. In addition, gold was fading, sitting on top of the breakout zone that we saw a few weeks back. Copper is rising and slightly bullish, producing higher highs and higher lows, and West Texas crude also bounced. We want to see copper and crude oil continue to move higher if you're bullish on equities. Everything else is mixed. The heat map is fading but not bearish, is a little bit more lime green for both the S&P sectors and the international markets. We'll look at these IBD 50 names for some potential trades this week. MarketSmith relative strength names in white, and the green are stocks that have traded above average volume for the week. Bukowski's showing 3 of 5 green with a CPI signal mixed since April the 30th, moving from 69.9% to 5.4%. That's bearish, but at extremes and could see that turn back up with 35 bearish patterns, 2 bullish patterns, and 200 patterns waiting for breakout. The numbers in parentheses were the previous week. Bottom line, again, this week we're cautious. We're watching institutions. We did pull back a little bit on the S&P and the Nasdaq and are looking for a bounce at the 21-day moving averages. A little bit more positive on tech this week. We're watching all the sectors and international indices as well. They're bullish, but they're fading slightly. And once again, signals are mixed to start the trading week. So at a minimum, we'll wait for the opening range on Monday and make a determination which direction we might be headed this week. Starting off with the Arca Institutional Index, this is the 75 stocks most commonly held in institutions' core portfolios. The list is over here on the left. Common names that most people are familiar with. What we're interested in is the fact that price action was above the 200-day moving average Tuesday, Wednesday, Thursday, dropped below it slightly on Friday. We'd like to see this bounce at the 21-day, continue to move higher. Potential targets are the 21-day on Monday, and then the 50-day. If we don't reverse, we're producing blue and green elder sticks, so we want to see that green and back above the 200-day to start the week. Referring to the S&P 500 equal weight index, where no stock is more important than the other, we did have a pullback on Thursday, reversal into Friday, coming back to the 21-day moving average and the 50-day. Potential for us to bounce, producing higher highs and higher lows to start the week. We could also push a bit lower, as the number of stocks trading above their 50-day moving average did pull back dramatically, as you can see, to around 54%, having reached 75% the previous week. So we want to see this improve. However, this pullback from the other perspective is giving us more opportunity. As stocks have pulled back, perhaps they can bounce. They're not way overbought, which we would see in the red zone over here, while we wait for direction on Monday to see which way institutions want to push the markets. Looking at the Spyders Sp500 Etf, we did see the highs on Friday rejected. We moved lower below the 9 EMA, closing just above the 21-day moving average and a 236 Fibonacci level. We thought we might get to the 200-day, but there is a potential now that we pull back to the 21-day or 50-day this week and then bounce and resume the trend before testing the 200-day moving average. MACD is above its signal line, but it has been fading, so bulls are losing control, and RSI is just above 50. So these conditions in MACD and RSI need to turn back up, and price needs to bounce at the 236, 21-day, and 50-day moving average zone, noted as the shaded blue area on the chart. If you're bearish, you want to see the moving averages taken out, and for RSI and MACD to cross over and move lower. As mentioned in the opening monologue, the tech sector did fare well last week, beating expectations. We also had a mixed picture with some of the big cap tech names pulling back while others did move higher. That said, the Nasdaq 100 is looking a bit better than the S&P 500 at the present time. So we'll look for this to continue. There's a possibility that some of these tech names will continue to move higher this week. Small caps had a decent week. It finished higher by 2.23%, though we did have this shooting star. Price action pulled back to the 2018 December lows before finishing a bit higher to end the week. While volume was higher, MACD is looking to turn back up, so this is more bullish than bearish. And we have RSI moving from an oversold condition, rising and heading towards 50. So watch small caps this week. This might be the better area to focus on. Small cap oil and gas, small cap biotech, and small cap technology stocks, to name a few. If we look at some measures of breadth, this is the New York Stock Exchange, over 2,900 stocks. And taking the new highs, subtracting new lows, it gives us this particular indicator, which is above the zero line, as you can see. Did finish a little bit lower on Thursday and Friday, but it is above the zero line. The moving average is climbing. It did cross above the zero line as well, while the New York Stock Exchange advanced decline in the middle panel turned a little bit lower on Friday. We'd like to see this to continue producing higher lows to start the week and then higher highs to end the week perhaps. We also have one red elder stick, so that's a caution signal. Two would be a sell signal, as we saw up here in February when we dropped on February 24th after the second red elder stick. So be aware of it and watch breadth this week. This is really more bullish than bearish as new highs continue to outnumber new lows. Taking an even wider view, this is the Wilshire 5000, a broad measure of market participation. We did pull back here as well, as expected, closing in the lower half of its daily range on Friday. MACD and momentum indicators continue to move higher, though they are peaking a bit. We have the 200 period moving average overhead, and on balance volume moved lower as expected. Checking money flow is still above the zero line, so there is a potential, if you're looking for bullish indications, that this could turn back up on Monday and Tuesday. It could also continue to move lower. Momentum seems to be suggesting that Monday we might see a test of the 50-day moving average, the red line, before we might see a bounce. All depends on the opening range. So wait for the opening range before making any decisions and have a plan ready as we start the first full week of May. Additional measures of breadth. This is the advanced decline percent for the S&P 500 in the top panel, mid caps, small caps, and the Nasdaq 100 in the lower panel. All four of these have come back to the zero line and could potentially produce a higher low if we get a bounce on Monday. There is also the possibility, of course, that we pull back to the minus 30% zone and that we could continue to move lower and test the 50-day moving average as we start the session on Monday. NAMO for the Nasdaq Mcclellan Oscillator. I'm looking at the black line, which continues to make higher highs and higher lows. The shaded area in the background are the NAMO values. We've made 3 peaks, and we did pull back a little bit on Friday. Though NYSE is at the zero line and starting to move higher as of the March 23 low, continuing to make higher highs and higher lows, and how the NYMO, with the latter producing higher highs and higher lows as well. We see the triple peak as well. No significance there other than the fact that I see 3 peaks. We have a red elder stick, previously pointed out. We want to see a green or a blue stick on Monday. And a NYSE, the summation index of 2,900 stocks, continues to move higher. It's through the zero line. You can see that this has turned green now. We could have the potential of moving higher as well, like we did back in December of 2018 into January. Overshadowing all of this, of course, is the seasonally weakest months of the year typically occur during the summer months, with July being the strongest month of the year by contrast for technology every year. So just keep that in mind. The put-call ratio was moving a bit higher to start the day on Friday, finished at 1.18. And if you are following Gamma and the thoughts therein, you want to see this turn back down, more calls being bought to start the week. One of those mixed signals that we alluded to is the bullish percent. This is the number of stocks on a point and figure buy signal. We can see that we're at the highs of the range versus where we were on March 23rd when things started to improve. So this does lean towards a more bearish outlook into this first full week of trading for the month of May. By contrast, if we look at the American Association of Individual Investors bull and bear readings, we can see that we have fewer bulls and more bears presently trading near the lows, like we were back at the end of December. of 2018 before we had that vicious bounce. So there is potential for this indicator to continue to move higher, as there are so many bears out there that it wouldn't take much to get more bulls to kick in and potentially start trading the indices a bit higher. So this is one of those mixed signals going into the week, more bullish than bearish at the present time. In addition, we haven't looked at this particular indicator in a while. If we take the ratio between VIX and the 10-year yield, TNX, in the lower panel, this gives us an extreme reading that we've worked off of since the March 23rd lows. Now this could continue to move lower, which would mean that VIX would need to underperform the 10-year yield and have this continue to move lower, which would be more bullish and lead to a potential retracement back up to the recent highs. Conversely, if this starts to turn back up and the 10-year yield drops, that would be a problem. Looking at the bond stock ratio in the lower panel, this is the S&P 500 weekly in the upper panel. Just below the 50-period moving average, but above the 200 period on the weekly time frame, producing blue elder sticks. So the weekly actually looks a little better than the daily charts, with a little bit more noise in the latter. The thing that we're looking at right now is the bond stock ratio had been dropping. That's bullish, of course. It bounced a little bit, but now it's more neutral. This could turn back down and produce a lower high and then a lower low. So very important that we watch bonds and yields this week. As we alluded to with the previous chart of the VIX 10-year yield ratio, which has the 10-year yield at extreme lows, we're looking for this to continue to move higher, for VIX to move lower, and for that ratio in that huge peak to continue to thrust to the downside, suggesting further upside in the S&P 500 in the lower panel. All of these things are speculative at this point, so we'll have to watch how the markets open on Monday and Tuesday. But suffice to say, we'd like to see the 10-year yield rising over the next few months. In addition, we're looking for bonds to break out of this 4-week sideways range. AGG, in this case, the Barclays Aggregate Bond Fund, this is what bond traders use as their benchmark. This has the kitchen sink, everything related to bonds as an aggregate ETF. So a move lower would be considered bullish for equities, and a move higher would indicate the safety trade is on again and a potential retest of the recent highs. With the same suggestion on TLT, this is the weekly time frame. We can see we closed lower on the week. However, Friday was a little bit of a bounce, which we'll look at in a second. There's potential for us to pull back to the moving average. MACD is starting to turn, and RSI is overbought on the weekly. While the daily did show a little bit of buying at the end of the day on Friday, pushing a bit higher, it's still below the 21-day moving average, so this is more bearish than bullish for TLT in the short term. If this doesn't get back above the 21-day and retest these pivot highs, I would suggest that we're probably going to move lower, which would be bullish for equities. RSI is tilted up a little bit. It's above 50, so there's a potential this could pop back up on Monday, Tuesday. If you're thinking about trading TLT, just keep an eye on it with these things in mind, while we watch for HYG and junk bonds to continue the path higher. RSI was oversold on March 23rd when we made that reversal. If you're bullish equities, you want to see junk and HYG high yield corporate debt continue to move higher. Note we're above the large volume by price band support level. Look for a bounce in junk and HYG this week if you're bullish equities, as this is a risk-on indicator. We also saw the currency pairs or forex pairs continue to tighten like they have been over the last 6 weeks. Here's the British pound US dollar pulling back on the daily time frame back to the 21-day moving average, moving sideways in a tightening range, with RSI above 50, with any further move lower bullish for the London Stock Exchange and the FTSE, with the London Stock Exchange finishing up 1% last week. Despite that fact, we did have the US dollar at the lower part of its recent range, chopping around between 101 and 99. Further downside would be good for gold most likely, and commodities in general, while crude oil responded to a weaker dollar by moving higher more than 16%. So we had a nice bullish reversal. Looking for this to move higher. If you're bullish equities, you want to see this continue to move higher. $20 per barrel and above. And if you're bullish home builders, construction related names, you would want to see this leading economic indicator in copper continue to make higher lows and higher highs as it's been since the March 23rd lows. While gold, on the other hand, did pull back to its breakout zone and it presently sits at the 1691 level, showing that there is a lack of interest in the safety or fear trade at this particular moment in time. So if fear starts to pick up, people start to think about safety again and hedging, you'll see gold continue to move higher into the summer months. Sectors did fade a bit last week. We have changed from bright chartreuse green over the last 3 weeks, 4 weeks, to more lime greens and greens. Note the darker green areas are the home builders, media, and retail group, which did outperform last week. We also had technology, software stocks, as we mentioned in the opening monologue, beating earnings estimates and revenues. So those are also looking pretty strong. Focus on those this week if that trend continues, while the international markets have faded a bit as well. A few more lime greens and yellows presently. As we read this from left to right each week, this is updated on a Friday, so we have an idea of cycles in the markets. While the individual sectors were improving last week, some of them pulled back to their 20 or 50-day moving average, as we can see with transports. Technology is managing to stay above the 20 and 50-day. It did pull back a little bit. On Friday, we had mixed results from those big cap tech names pointed out in the opening monologue. Healthcare is also improving. We are making higher highs and higher lows. We're testing the 20-day. While staples and utilities did pull back, we're looking for improvement in these sectors in addition to industrials and financials. Energy a little bit lower on Friday. All of them having a pretty decent week going into the little fade we saw on Friday. So there's potential for this to bounce and continue higher. Communications, of course, that's Netflix, Facebook, Charter Communications, Fox, Disney, companies like Roku that comprise the list. Look for these to continue higher and for a higher low in the sectors to start the week. Adobe pulled back a little bit above the 9 and 21 days potential that this can bounce this week. Alexion Pharmaceuticals faded during the week back to the 200-day. Look for a bounce. We're about to get a 21-day, 50-day, 200-day cross in the short term. Amazon out with earnings last week. Of course, we want to apply the 5 to 7 day rule. Give it about 5 days to see how institutions set up on this one. It could pull back below the 21-day. RSI could reset again. So there's potential for more downside. We could also see a bullish day on Monday as it's trading within that 5 to 7 day window. Anthem, new on the list. We're looking for this one to either bounce at the 200-day or test the 21-day. This company provides managed healthcare services. Looking for this to continue higher, perhaps if it can bounce off the 200-day. Pretty decent IBD metrics, and annual sales and earnings continue to climb. It has earnings out in July, just recently reporting a beat of 7%. looking for a follow-through in the healthcare names as we previously mentioned. Team Alexion, this one looks like it could bounce as well and follow through back above the 9 EMA. Bounced at the 21-day with RSI above 50. Volume increasing and MACD still above its signal line. While stocks like Audio Codes, AUDC, at highs, it's a fairly inexpensive name. If this breaks out and continues higher, I would use the trade of the day setup for entries, exits, and stops. RSI is above 50 and rising, with volume showing institutions have been picking up shares. MACD is above its signal line and rises. It's probably one of the nicest looking IBD 50 stocks for this week. And previously mentioned weeks ago when it started to reverse back here in March and got back above the 200-day. Retested it 2 weeks ago and followed through on the gap up. In earnings, the company beat by 39%, 18 cents in March 2019 versus 25 cents. Earnings surprise 4%. RSI line is rising. That's a good sign. Annual sales and earnings continue to climb, the lifeblood of any decent company. We got high 90s and A's populating the IBD metrics. It's one of my favorite stocks going into the week, though it is a bit overbought. Volume would suggest institutions have been buying shares, so we'll see how this starts the week. So we'll mark this one down as a potential trade for the weeks ahead. Autodesk pulled back to the 21-day. It's in a bullish trend. We want the 21-day to be defended. If it is on Monday and Tuesday, that would be a big plus and a potential trade. Wait for that first bullish candle before acting on Autodesk. All of the gold stocks on the IBD 50 were strong. Barrick Gold, Franco-Nevada, Kirkland Lake Gold, all of them had a nice reversal on Friday. Potential for the safety trade to start picking up again, so look for a follow-through this week. Bristol Myers Squibb looking for these pharmaceutical names to bounce off the 21-day moving average. RSI will turn back up as a function of price. MACD might cross over. This is another healthcare name we're watching for pharmaceuticals to continue higher. We had Eli Lilly also pull back last week, with Pfizer, AstraZeneca, and others following suit. While Dexcom is looking good, holding the 9 EMA bullish candle on Friday. Look for this to follow through on Monday. Eli Lilly pulling back to the 21-day. Look for a bounce. As this is a better entry for potential follow-through, RSI would turn back up as a function of price. And look for volume to continue to print above average values. Facebook had a good week, pulling back on Friday after that gap up on Thursday. Looking for some consolidation around in this zone right around 197 to hold. You can see buyers stepped up under Thursday and Friday's lows, pushing it back up. We've got a 9 EMA crossing through the 200-day, a 21-day very soon. There's always a potential for this to pull back first before moving higher. I do like Facebook longer term. Look for a bounce in the short term. Franco-Nevada, another one of those IBD 50 gold stocks that looks good. Bullish engulfing candle, RSI rising. GSX looking for a follow-through off the 21-day. Kirkland Lake Gold, this one actually looks the best out of the group. Hasn't followed through as much. Maybe we can get a nice entry before it takes off and tests the 49.50 zone in the short term. Maybe we get 6, 7, 8 points out of this one. Lumentum, LITE, back to the 21-day. I believe this had earnings in the next few days. So keep an eye on LITE, maybe a trade in the short term. MPW, Medical Properties Trust, looks like this is going to bounce at the 21-day. Mercury Systems, looking for a bounce at the 9 EMA. Buyer stepped up late in the day and pushed it back into the upper half of its daily range, a big plus. Pull back to breakout zone. Netflix looking for a bounce this week as well. RSI still above 50. Price above the 9 and 21-day. NVIDIA bounced at the 21-day. We're looking for a rise here as well as AMD, CLAC, and other semiconductors were off a little bit on Friday. Regeneron, this one's pretty close. Another pharmaceutical name that pulled back last week, holding the 21-day. Do we bounce here and follow through? Watch RSI and price action. Volume needs to pick up and MACD will turn as a function of price. Scott's Miracle Grow, we're looking for a follow through. This one held up very well on Friday, bouncing at the 9 EMA. Service now, inside day, we're looking for a bounce here. This one had earnings last week. Blue dot scan showing up. A nice beat, 57%. 67 cents last quarter versus $1.05 this time around. That's a pretty big beat. Earnings out in July now. Annual sales and earnings continue to move higher, and we have very high IBD metrics. Company develops cloud-based IT software for workflow automation, data consolidation, and business administration. This is another one of those names in the technology group, a lot of them beating, while a lot of people are still very bearish for the equity markets in general overall. Trade desk, we're watching how it positions itself above the 9 EMA. RSI is still above 50. TradeWeb markets, looking for a bounce here above the 21-day. For a company that builds and operates electronic over-the-counter marketplaces in the United States and internationally, annual sales and earnings still climbing and good IBD metrics. Earnings on the 7th, so we're right around the corner. Trex holding the 9 EMA. Earnings this week, while Viva Systems continues to trend along the 9 and 21 day, with buyers showing up on Friday and on Tuesday at the 9 EMA, with company earnings out towards the end of the month, annual sales and earnings climbing, and good IBD metrics. Various Analytics, VRSK, this one bounced at the 9 and 21 day, looked very good on Friday. We'll keep an eye on this one on Monday, as we do have earnings this week. Good annual sales and earnings, we're expecting them to beat as well. Provider of proprietary actuarial and underwriting data related to the U.S. property and casualty insurance risks throughout the United States. Vertex Pharmaceuticals, with all the other pharmaceutical companies pulling back last week, we're looking for some of these to bounce at the 9 or 21 day moving average, or pull back to breakout zones like we have on BRTX this week. Volume increasing Thursday and Friday, looking for a MACD to cross as a function of price. If we start to push a bit higher, watch all the other pharmaceutical names to follow suit. And finally, Zoom. We're watching to see if this moves back above the 21 day like it did back here in early April, or if it continues to move lower. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for May the 3rd, 2020. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Make sure you check out the stocks in the MarketSmith Relative Strength Group. Many of these look very strong. GMAB is one in particular, PayPal as well. In addition to the stocks in green from the top volume percent gainers that all traded above average volume last week as potential trades. Be cautious this week. Let's wait for the opening range on Monday, see how things start the week. We have the potential for moving lower first. So all depends on futures, how we open. We'll position accordingly. I hope this helps. Take care, and we'll talk to you soon.